In a market often defined by sharp volatility and rapid sentiment shifts, today's developments stand out for their measured resilience. Bitcoin has demonstrated remarkable stability, holding firm near the $78,000 level even as broader economic uncertainties linger, while Ethereum has delivered a notable surge, climbing with renewed vigor amid strong institutional interest. This contrast raises a critical question for investors worldwide. Is the next major crypto rally quietly beginning, or are we witnessing another temporary rotation within an ongoing consolidation phase? Welcome to this latest market update from Crypto Hub, your trusted source for clear, in-depth analysis of Bitcoin, Ethereum, and the evolving digital asset landscape. As of early May 2026, Bitcoin continues to anchor the cryptocurrency market with impressive steadiness. Trading in the range of approximately $77,000 to $78,500, BTC has maintained key support levels despite earlier corrections from its 2025 peak above $126,000. This holding pattern is not accidental. Institutional flows through spot Bitcoin ETFs have provided consistent demand, absorbing selling pressure and reinforcing a structural floor around the $75,000 to $68,000 zone. Market dominance for Bitcoin has climbed towards 60% in recent weeks, reflecting a flight to quality as some altcoins underperform. Long-term holders appear reluctant to distribute at current levels, while spot buyers have stepped in aggressively on dips below $75,000. This behavior echoes historical patterns where Bitcoin acts as a macro hedge and store of value during periods of mixed global growth, persistent inflation concerns, and geopolitical tensions. The resilience of Bitcoin stems from several converging factors. First, the post-halving supply dynamics from 2024 continue to exert upward pressure on scarcity, with daily issuance now well below 1% annually. Institutional adoption has matured significantly, with Bitcoin increasingly viewed not just as a speculative asset, but as a treasury reserve instrument by corporations and even nation-states in discussion. ETF inflows, though moderated compared to the explosive 2024-2025 period, remain net positive in recent sessions, signaling sustained confidence from traditional finance. Moreover, Bitcoin's correlation with equities like the S&P 500 has fluctuated but often serves as a risk-on barometer. When equities rally on improved liquidity signals or softer monetary policy expectations, Bitcoin tends to follow or lead, yet its decoupled behavior during stress periods underscores its unique position. Analysts tracking on-chain metrics note that exchange reserves for Bitcoin have declined steadily, reducing immediate sell-side liquidity. Meanwhile, the number of addresses holding at least 0.1 BTC or more continues to grow, indicating broadening retail and institutional accumulation. Technical indicators paint a picture of consolidation within a larger bullish structure. The asset has respected higher timeframe supports with the 200-week moving average and key Fibonacci retracement levels from the 2025 high, providing dynamic defense. Volatility has compressed, which historically precedes significant breakouts, though direction remains contingent on macroeconomic catalysts such as Federal Reserve rate decisions, inflation data, and global liquidity conditions. Predictions for Bitcoin in 2026 vary widely, from conservative targets near $100,000 to more optimistic institutional forecasts reaching $150,000 or higher by year-end, driven by potential strategic reserve discussions and further ETF maturation. Shifting focus to Ethereum, the narrative has turned decidedly more dynamic. ETH has surged in recent sessions, outperforming Bitcoin on a relative basis and reclaiming important psychological levels around $2,300 to $2,400. As of the latest trading, Ethereum sits near $2,308, reflecting gains fueled by a combination of network fundamentals, institutional product innovation, and ecosystem momentum. This outperformance is noteworthy because Ethereum often exhibits higher beta to market moves, amplifying gains during risk-on periods while also facing sharper drawdowns. The current surge appears rooted in tangible developments rather than pure speculation. A primary driver has been the performance of spot Ethereum ETFs. After periods of outflows earlier in the year, these products have recorded strong consecutive inflows, with some sessions pulling in over 100 million and weekly totals reaching their best levels in months. BlackRock's staking-enabled Ethereum ETF, ETHB, launched earlier in 2026, has attracted significant capital by offering yield-bearing exposure, addressing a key limitation of initial spot products. Holdings across major ETH ETFs now exceed $13 billion in some reports, with leaders like BlackRock's offerings showing robust asset growth. This institutional channel not only brings fresh capital but also legitimizes Ethereum as a productive asset capable of generating returns through staking, currently yielding around 3 to 5% depending on network conditions. Large players, including entities like Bitmine, have committed hundreds of millions, sometimes billions, in ETH to staking platforms, locking up supply and tightening the available float for trading. Beyond ETFs, Ethereum's underlying technology continues to evolve. The Pectra upgrade, which went live in 2025, enhanced validator efficiency, increased blob throughput for Layer 2 networks, and improved account abstraction, making the ecosystem more scalable and user-friendly. Upcoming hard forks and developments in Layer 2 solutions are further reducing fees and boosting transaction volumes, positioning Ethereum as the settlement layer for tokenized real-world assets, decentralized finance protocols, and even emerging AI agent transactions. On-chain activity has shown unprecedented surges in some metrics, with network usage expanding despite price volatility. Total value locked across DeFi protocols on Ethereum and its L2s remains substantial, and the shift toward real-world asset tokenization is drawing traditional finance participants who require Ethereum's smart contract capabilities. This Ethereum surge occurs against a backdrop where Bitcoin has held steady, creating a healthy rotation dynamic. When Bitcoin dominance rises, it often signals caution or capital preservation. A subsequent Ethereum outperformance can indicate broadening market participation and the early stages of an altcoin season. Historical cycles demonstrate that major rallies frequently begin with Bitcoin establishing a floor, followed by Ethereum catching up and then leading altcoins higher. Current ETH BTC charts show Ethereum testing key resistance zones after a prolonged period of underperformance relative to its counterpart. A decisive break above certain thresholds could signal the start of a multi-quarter outperformance phase for ETH and the broader ecosystem. Market observers are closely watching several indicators for confirmation of a sustained rally. Total crypto market capitalization has hovered around $2.5 to $2.6 trillion, reflecting modest gains but with room for expansion if sentiment improves. Fear and greed indices remain in neutral to cautious territory, suggesting that euphoria has not yet returned, a healthy sign that prevents immediate overheating. Liquidations in recent volatility spikes have cleared weak leveraged positions, leaving a cleaner order book. Moreover, declining correlation in some periods between Bitcoin, Ethereum, and traditional equities hints at maturing market dynamics where crypto-specific fundamentals can drive independent moves. However, risks remain pronounced and must be acknowledged in any serious analysis. Macroeconomic headwinds, including sticky inflation, potential stagflation signals from energy markets, and shifting central bank policies, could weigh on risk assets. Geopolitical developments, such as tensions affecting global trade routes or commodity prices, have already injected volatility. Regulatory clarity continues to evolve unevenly across jurisdictions, with positive U.S. developments around ETFs contrasting with ongoing scrutiny elsewhere. For Ethereum specifically, competition from faster or cheaper Layer 1 alternatives persists, though its first-mover advantage in developer mindshare and ecosystem depth provides a formidable moat. Bitcoin faces its own challenges, including debates over its ultimate utility beyond store of value, and the possibility of deeper corrections if long-term holders begin distributing more aggressively. Technical analysis offers additional nuance. Bitcoin is approaching resistance near $80,000, a level that could open the path to retesting 2025 highs if cleared with volume. Failure to break higher might result in renewed testing of the $73,000 to $75,000 support cluster. For Ethereum, the $2,400 to $2,500 zone represents immediate hurdles, with analysts eyeing $3,000 or more in optimistic scenarios tied to continued ETF inflows and network upgrades. Seasonality also plays a role. May has historically been one of Ethereum's stronger performing months on average, adding a statistical tailwind to current momentum. Yet, no indicator is foolproof, and traders should monitor volume profiles, open interest in futures, and funding rates for signs of overheating or exhaustion. Looking ahead, the interplay between Bitcoin's strength and Ethereum's surge could indeed mark the beginning of the next leg higher for the crypto market. Institutional adoption continues its secular trend with more advisors, family offices, and corporations integrating digital assets into portfolios. Tokenization of real-world assets on Ethereum could unlock trillions in value over the coming decade, while Bitcoin's potential role in nation-state reserves or as a global settlement asset gains traction in policy discussions. The combination of maturing infrastructure, regulatory progress in key markets, and technological advancements creates a foundation far more robust than previous cycles. At the same time, participants must maintain disciplined risk management. Position sizing, diversification across assets, and awareness of macroeconomic crosscurrents are essential. The crypto market rewards patience and thorough analysis over impulsive speculation. Those who study on-chain data, institutional flows, and network metrics rather than chasing headlines are better positioned to navigate the inevitable swings. In summary, Bitcoin's ability to hold strong near current levels provides a solid base, while Ethereum's recent surge highlights renewed enthusiasm for smart contract platforms and yield-generating opportunities. Whether this evolves into a full-fledged broad rally will depend on sustained inflows, positive macro developments, and continued execution on technological roadmaps. Investors and enthusiasts alike should stay informed, remain vigilant, and approach opportunities with a long-term perspective grounded in fundamentals. This has been a detailed market briefing from Crypto Hub. We remain committed to delivering professional, unbiased insights into the world of cryptocurrency. Stay tuned for our next update as the situation develops. And remember that while the potential for growth is significant, all investments carry risk and thorough due diligence is advised. Thank you for watching Crypto Hub.